Welcome to Tax Smarts Unlocked, the podcast for individuals and small business owners looking to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services, each episode is packed with insightful advice on proactive tax planning to help you navigate the complexities of tax laws. Here's your host, David Robson.
Welcome to another episode of Tax Smarts Unlocked, where today we're drilling down into an essential topic for business owners: the tax implications of business structure. Whether you're a new entrepreneur or a seasoned business operator, choosing the right entity for your business is pivotal for optimizing tax savings and ensuring your compliance. I'm David Robson, your go-to tax expert, here to guide you through the maze of business structures. Today, we'll explore from sole proprietorships to corporations and everything in between, highlighting the unique tax advantages each structure offers. We'll use real-world case studies, some humor to keep things light, and empower you with informed decisions to save you money. Now let's delve right into the details. Let's start with a broad overview of the different types of business structures you might consider. The sole proprietorship is the simplest form, with the business and owner being one and the same legally. While it's straightforward and easy to set up, it's worth noting that the owner bears all the liability and income flows directly through personal tax returns. Next, partnerships offer a collaborative approach where two or more individuals share ownership, which also means sharing liability and profits. The partnership itself doesn't pay income tax. Instead, it passes through profits to the partners, who then report it on their personal tax returns. Then we have limited liability companies, or LLCs. This structure is prized for its flexibility and offers protection by separating personal assets from business liabilities. LLCs can choose how they wish to be taxed, as a sole proprietorship, partnership, or a corporation, depending on their preference and situation. Last but not least, we have corporations, which further divide into S corporations and C corporations, each with distinct tax treatments. Now, let's break down each structure in terms of tax treatment. This can be quite nuanced, so bear with me as we glide through the nitty-gritty details. For sole proprietorships, as I mentioned earlier, taxes are filed under an individual's tax return on a Schedule C. It's important for sole proprietors to be aware that this means their earnings are subject to self-employment tax, covering both Social Security and Medicare. Partnerships require filing an informational return on Form 1065, although the actual income tax is paid by the partners based on their share of the income. LLCs, as we've seen, provide really useful flexibility for taxation. They can be treated as a disregarded entity for tax purposes, which means the income gets reported on the owner's individual return, avoiding double taxation. However, if considered a partnership or corporation for taxes, an LLC must file different tax forms. When we hit the domain of corporations, it gets more complex. C corporations are distinct legal entities and must pay taxes on profits at the corporate level, and any dividends distributed to shareholders also get taxed on their individual tax returns. This is often referred to as double taxation. In contrast, S corporations allow for income, deductions, and tax credits to pass through to shareholders, avoiding this double-layer tax scenario. To qualify, though, the corporation needs to meet specific IRS requirements, including limits on the number and type of eligible shareholders. Choosing between these options depends significantly on your financial goals, and it brings us to the advantages and disadvantages of each structure. The sole proprietorship's benefit lies in its simplicity and ease of control, but with potential downsides in unlimited liability and lack of sophisticated tax benefits. Partnerships offer shared input and expertise, yet they can become complex with multiple owners needing to agree on decisions, and the unequal distribution of profits could lead to disputes. LLCs offer a sweet spot with limited liability, tax flexibility, and fewer regulations compared to corporations. They are advantageous for businesses seeking both protection and tailored taxation. Corporations, particularly C corporations, shine in their ability to raise capital, but they must navigate through extensive regulation and the potential pitfall of double taxation. S corporations typically attract businesses seeking to avoid double taxation, yet maintain the protection against liability, though IRS qualifications can restrict their usage. Despite the structured advantages, Business owners often hold misconceptions about each entity's taxation. One common myth is that LLCs automatically save taxes compared to corporations. This isn't inherently true, as it depends on how income is reported and taxed, depending on the individual circumstances. Another misconception is that incorporating a business drastically reduces tax obligations. While corporate structures provide various advantages, they do not automatically ensure a lower tax liability without careful financial planning. Knowing these, let's move on to some real-world scenarios so we can illustrate how business structures affect tax obligations in practice. Let's take the example of a freelance graphic designer, Lucy, who initially operated as a sole proprietor. With increasing income, she faced hefty self-employment taxes. After consulting a tax professional, she opted to form an LLC, electing S-Corp taxation. This allowed her to save on self-employment taxes by taking a portion of her income as distributions, which are not subject to those taxes. Alternatively, consider a tech startup run by friends Mark and Alex. They started as a partnership, but switched to a C corporation as they sought venture capital. This move encouraged investors while opening tax deductions, like reasonable salaries and medical insurance premiums, treated as business expenses. When selecting the right business entity, consider your financial goals, the level of liability protection required, and tax obligations. Sole proprietorships are ideal for low-risk businesses and individuals wanting straightforward filing. LLCs serve those looking for tax flexibility and liability protection without complex management requirements. Corporations fit entities in need of substantial capital and a structured management hierarchy, with S-Corp providing a balanced approach for small to medium-sized firms seeking the benefits of pass-through taxation. Proactively planning your business structure decision can minimize tax liabilities. Knowing your options is a powerful tool for financial optimization. In today's digital world, there is no shortage of resources and tools for further exploring business structure and tax planning, from online tax calculators to professional consultation services. Websites like irs.gov offer a wealth of information, while community workshops and webinars can provide practical guidance. Engaging with a tax professional allows for personalized advice and strategies tailored to individual financial situations. For listeners seeking further guidance or personalized tax advice, don't hesitate to reach out. We're here to help you unlock smarter tax planning strategies. As we wrap up this episode, let's recap what we've covered. Today, we examined the variety of business structures, sole proprietorships, partnerships, LLCs, and corporations, and their differing tax implications. We've highlighted the importance of understanding the nuances in taxation between these entities and how proactive decision-making in this area can lead to significant tax savings. By exploring case studies, we unveiled how real-world decisions about business structure result in different tax outcomes. Choosing the right structure is critical for your financial success and stability. Thank you for tuning into Tax Smarts Unlocked. We aim to demystify the complexities of business taxes and equip you with the knowledge to make informed decisions. We believe that with the right insights, tax planning can be more strategic than ever. Remember, choosing the right business structure doesn't have to be stressful or overwhelming. With the guidance provided here, you're one step closer to optimizing your tax situation and achieving financial efficiency. If you enjoyed this episode, please subscribe, rate, and review our podcast. We look forward to guiding you on more tax-smart journeys ahead. Until next time, happy planning, and may your deductions be ever in your favor.
Thank you for joining us on Tax Smarts Unlocked, the ultimate podcast for individuals and small business owners ready to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services. Each episode has been carefully crafted to provide you with insightful advice on proactive tax planning. By adopting a smarter tax approach, you can focus on what you do best, growing your wealth and your business. We're here to guide you every step of the way. Don't miss an episode. Subscribe to Tax Smarts Unlocked on your favorite podcast platform and unlock the secrets to confident tax planning. Remember, it's time to take control of your taxes and unleash your full financial potential.